Righto, welcome to the blog for Tuesday, the 4th of September, start of a brand new month, and this is day 61 of 65 of the Compound Effect Challenge. So this is basically the 13th week of 13, or my 3-month challenge that I set myself based on the Compound Effect. Inspiration gained from the book called The Compound Effect by Darren Hardy. Just all about making forward progress every single day and applying my edge and applying my method, and just doing the little things, even when you feel there's certain things you don't want to do, or just little. Often I find it's the little things that they're so simple to do, but quite often it's almost easier not to do it. And when you think about all the little things just stacking up over time, always working with you or against you, and that's what the compound effect talks about. Yeah, one way or another, it's going to impact you if you decide to help it work for you. It's not that difficult to make it work on your side. It's just making that decision and going ahead and doing it. So just really taking that idea, that concept, and applying it. Sticking to my method, applying my rules day in day out, be doing the same thing. And it's really important, to get consistency with trading. Trading is something that needs to be so mechanical and so routine, and always evolving, of course. But until I found for myself, progress really doesn't come until you can spend months and months of just really sticking to one thing and doing it, and just getting really solid and just getting that routine and habit really well set. It doesn't matter how clear you are with it. Obviously it's got to be clear, but until you get sort of those habits or time behind you, you won't. Personally, I didn't feel really confident until could get that time behind me, and that's what's important. And the compound effect is just an extension of that, and making sure I'm doing that every day. So this is the last week of that. What I'll do is sit down and personally is review what's happened over this 3 months, and then of course think of what's the next step. Applying another challenge for myself. Definitely recommend it. And for me, it hasn't been just about trading. Um, I've applied it in a few other areas of my life. It's a personal thing, but there's basically 4 major areas of my life that I want to apply it to. So I've just seen the changes and the results in a whole heap of different areas. Obviously, I'm here talking about trading, but just the concept of the compound effect and just thinking about the little things, often that you don't want to do them, but just making sure you do the little things every day. Now that we're getting towards the end of this challenge for myself, man, it makes a difference. As for the strategy, what I've done is I was just having a look over August, and certainly August is a month that you can learn a lot from. In August, there's a real lack of volume. It's basically the summertime break. It's almost like trading for us over Christmas time, if you can imagine. It's just not the best time for trading. It's that real block of holidays. Everyone just wants to be away having fun, and certainly doesn't want to be in the office trading and things like that. So that's what August is. If you think about that, it's a more difficult time to trade. For me, this is my 3rd August trading these markets, and I'm still very much, I want to see it and be there live and trade it to learn from it. But certainly got plans to have time off in the future in August, because what I've found is when I look back over my results, like I record everything, down to the tick, down to the trade, and I've seen, in August, so the last 4 weeks, for example, the trades have dropped off a little bit as far as the physical number of trades. I'd say maybe a third or a quarter. Some weeks even a little bit lower than that, just depending on the week it was. So still getting set up. It's not like the setups have completely disappeared, but just finding the consistency or the reliability of them is the thing that's really dropped off over the last 4 weeks. If I was to break down what the actual system produced, it's week 1 of August was 1 winner, 3 break evens, 3 losses. Ended up break even for the week. The next week, week 2 of August, 3 winners, 1 break even, 3 losers. So that's probably the best week of August. That was a 3-point gain. The next one, 1 winner, 2 break even, 4 losses, for a 2-point loss. And then last week, 2 winners, 2 break even, 6 losses. Although a lot of those losses were 1 and 2 tickers. So even though I had 2 winners and 6 losses, so 3 times my losses, I still ended up after commission only down 1 tick, so not even a point. And I look back before that, basically every week I'm producing 8, 10, 12 trades. It might be 5 winners and 4 losers, or 4 winners and 5 losers, but there tends to be that real definitely just as many winners as losers. And because of the way I trade, my profit's twice as big as my losses, or what I'm finding is even more so the case. A lot of my losses are 2, 3 ticks as well, so always at least twice as big as my losses is the winners. Can make some real forward momentum when I just start getting 50%. So over the last month, even though for the last 4 weeks, when I look at the calculator, it's like after commission is still up. There's been quite a bit of trades and quite a bit of time to be almost basically break even for the last 4 weeks. But it just the results show, especially if you're systematic and following a method, that August is certainly going to be tougher, and it's not going to be a as consistent market. These markets at the end of the day do whatever they want really, but you can definitely put a box around August and say it is certainly a little bit different because of the lack of volume. So again, just from recording and understanding exactly what the system and the method produces, that sort of information can be so valuable as far as moving ahead. I think for me the main thing is, I look for 10 tick plus moves. I like trading that. I'm not so interested in really going for the smaller moves, 1 points or even 2 points. I like to get at least 2 points, more like 2.5 points. I look back over the last month and see a lot of areas that just went 5, 6, 7 ticks. So a lot of regions that just didn't quite get there, and I guess that was a lack of volume, a lack of movement. Meant quite often these areas that are quite reliable just weren't quite getting there, and as a result, that really brings back the overall points or the overall result. But that's where it's important also to have really good exit strategies. I'll do a blog on that hopefully soon this week when I get some time. But for me, I've seen August is always. I wouldn't take back anything that's happened in August. It's been still a fantastic learning month. But really seeing the exit strategy at times play into my strategy really, really well. And I'll go in this a little bit more in the blog that I do on specific exit strategy. But basically, like an entry strategy, you have something very specific and multiple ways of getting into the market. Well, an exit strategy needs to be exactly the same. You need to spend a lot of time on creating exit strategies as well. And for me, I've got a 3-tier strategy, or 3 types of, sorry, a 3-tier exit strategy, 3 types of exits. I break it down as to whether I believe the market, I should be cautious, or whether it's got potential, or whether it's got massive potential. I'll talk about that with one of the trades that I took today. But basically, if I'm cautious, I'm taking out some contracts early, taking out thermal contracts at 5 ticks. So a lot of the trades through the last 4 weeks have been cautious because there's been lack of movement. They've been always running into quite strong support resistance areas. So for that reason, I'm taking out contracts earlier. The potential for bigger gains is obviously reduced by a lot, but I'm getting to a lower risk or a break-even stage a lot quicker, and I've seen something like that sort of part of my exit strategy really save me and sort of keep me afloat during this August period when I saw a lot of trades just go 6, 7 ticks and not quite get there and come right back, and eventually would have been a full stop out if I wasn't taking some of the contracts out. So from that, really learned a lot about exits and the way that I apply my exits. And then something that has potential. If it's not running into any support or resistance lines, I'm prepared to go for more, not get the contracts out so early. And then ones that have massive potential, that's where I'm prepared to go for a bigger trades and occasionally get a 4 or 5 point trade. But that's sort of what I'm talking about there. I'll certainly get into within a specific blog post, which I'll do soon. And it's handy. I feel it's good information that I've done a fair bit of research on. But doing something like a blog like that for myself, it always, like I said, it's really beneficial for myself too, because it just really consolidates and confirms it in my mind by doing specific recordings on it. And I'll talk about a particular exit strategy around this particular trade here that I took. Today there was 4 key levels: 1408, You see the market's topped out at it, so it's good to see something like that, knowing that the market is definitely reacting to it. So keep that in mind for future. 1403, right around the start of the day, it certainly reacted there, and you can see again it's reacted to it at the end of the day. 1400, it reacted to it around here. It blasted straight through it when I was watching it through this period here, but it's came up and certainly dealt around it. It was the area where it really decided to really launch itself from in the afternoon. And at 1396, just the most significant level in the market at the moment. It was a complete reversal. The market just formed this reversal pattern almost to the tick around this 1396, and it's an area that previously, a few weeks ago, was so significant in the market, and again the market's coming back and really touching on it and making a significant area. While we're there, I might bring up the 15-minute chart, and so this is 1396 here. So at the moment, no significant trend line. You can see that trend line there. Obviously it's going to be down here somewhere, so it's not playing a part. If we do go lower, I'll extend it. But there's no significant trend line at the moment. But there is a significant support and resistance area, which is this one here. And we're going back. Here it is. No. It doesn't get back far enough, but it's certainly an area in the market that's one of the, it's a key level, but of all the key levels, it's the one that's having the most impact. And these levels have been around for weeks now. I've been using these same levels, haven't changed them for weeks, and the market just keeps on reacting to them. And that's the benefit of having some strong support and resistance areas or trend lines. It just gives the market, sort of chops it up and gives it some clarity and some direction as to where it could potentially react and move and launch itself from. For me, it's certainly a massive part of my strategy and what my trading is based around. And for the day, I took saw 3 opportunities. 2 of them I got no fill. So this one here flashed on the order, no fill. This one here, 1 tick from the order, no fill. And then this one here, I took the actual trade. Ended up being a break-even trade. It's just one of those days for myself. This one here was, which I'll break it down in a sec, 1 tick from getting filled, and then obviously fell away really well. It was a great sell area. This one here went 9 ticks, popped back, hit my break even to the tick, and then went on to 14. Massive points. But this particular one was one of those ones that I believed had bigger potential. Had my target set at 1402, but I'll get back to that one. So as far as today goes, we hung around this key level at 1403. The breakout box I drawn around the perimeters of the pre-market data. So a couple of times the market got outside of it. As we're pushing down here, wasn't interested in it at all. The Russell was really lagging. It was trying to hang to the upside, and the Russell was quite significant today. It really resisted at the downside. And this is why watching the markets for me is so important. I watched it all through this beginning period, really resist the sellers and try to hang and stay higher. And then when we got this reversal pattern, it was the key indicator to it going higher. It was the one that was just, when all the other markets were going sideways, it was just popping up and just really getting some momentum and trying to go. And even through here, when the market it reached its gap and just blasted all these other markets away, and just all day long, just all it wanted to do was go higher. So through here, when I saw the Russell, all the other markets are pushing through the breakout box, except for the Russell, just didn't want a bar of it. So for that reason, certainly not going to take the sell there. And that's where the market's popped back up within the range. It's come a second time. If you'll flip over the 1 minute chart, shows it a lot better. But here's the breakout region here. So it popped underneath it, not interested, popped down again. So you can see it's gone a second time, then a third time. So what's happened is, second time the Russell was starting to look a little bit better, but still wasn't really interested. All our markets by now was really starting to go. Then it came a third time here, and again all the other markets were just so strong on the downside, like well and truly broken. But it's just the Russell that was just waiting and waiting and waiting. And then basically at the end of this candle, then the Russell really got going, and I was waiting for it to confirm. Popped on the order. Where did I place it? Must have been within this candle anyway. I saw it come within and flash on the actual order, but not get filled, and then of course that's where it's dropped away. But And another way to look at it too is talking about key pivotal points in the market. So obviously this here is a key pivotal point. So when the market comes down and breaks it, again watching it, when it broke it here, it's just, I mean, the whole time the Russell was just basically lagging a little bit, and it wasn't until it eventually started to get going I was able to put on the order, and it was just a little bit too late. But you know, for me, I was fine to get missed there because I was really waiting, just really trying to make sure I got the area right. I mean, this area has failed me a little bit of recent times. I've just been a little bit, I guess, too relaxed on the other markets. So just making sure I really got market support. Eventually got all that, and it's just gone without me. From there, so this is where we've got this reversal pattern. So directional trade is just purely based on the predictive average, but just looking for a change in direction. So when the market comes down, it pops up, pops down like this. So this is an area that could potentially obviously go back to the lows. But you know, in a situation like this, the market does two things. It either the 5-minute sell, which came up here, the arrows aren't there, but there's a 5-minute sell here that failed. So it's either going to push back to lows or start a new direction and get move away from that continuation to the downside and get a new direction. As far as this area here, watching other markets is, especially the Russell, this is where it tells you most times whether it's potentially an area of continuation back to lows or whether it's starting a new direction. And very early on, the other markets were showing clear signs, and like I said, the Russell very much pushing high all through this region here when it started breaking up. Where I entered here, the Russell was already well and truly up here. It was just going and just on its way, as were the other markets. So something like the directional, depends. I need a key area for it to break. So up here is this key area. So, but waiting for it to get up there, for me, is just a little bit late. This is where the predictive average crossed over. What I saw is if it was going to come back and get underneath here, then the area was over and I was going to potentially head back to the downside. So getting in this area here, I just need to pop up out of this range, then buy here. What I need to do is my stop is going to be down here, so I need to break this sideways range if it was going to stop me out and not go in my direction. So a very high probability area just stops and everything in the right direction, momentum on the upside, all the other marks going higher. Just definitely an area I want to be a part of. And from there it's gone 9 ticks, stopped me out there for break even or 1 tick trade, and then from there it's really launched itself. So as far as exits, so this potential one, what I was watching is, for me it had massive potential. Saw, I used my 15-minute chart to get a gauge for that, and saw it as potentially going up to the next key level, which is 14.03. So I always go a point before that, so that's why for the reason for 14.02. So I just basically categorize my trades as in trade 1, trade 2, or trade 3. 1 meaning cautious, 2 meaning potential, 3 meaning lots of potential. So for me, I had a category 3 exit for this particular one. And and within that I can change the category as the trade going. Like, so if it really fails to go and watch the other markets, and through the other markets here, the other markets started to stall a little bit, so there's potential to get out some profit, 5 ticks. But just watching the chart pattern and the formation, just believe there's just very high probability of it going higher. So for that reason, even when I saw it stalling in this region here and ultimately getting the break even, but even when I saw it stalling here, just didn't drop it from a category 3 exit. Just believed it was potentially going to go, and of course eventually it did. But that's all that information is coming from the 15-minute charts. Because what happens is, obviously there's a key level here, so this is something I was cautious of too. But when I saw the market come up like this, pop back, what I'm going for is 10 ticks. So my 10 tick exit when I'm entering here was right at 1400. So what I do here is I'm somewhere between getting everything out at 10 ticks or letting it go to the next support and resistance area. Somewhere between a category 2 and a category 3 exit. What's probable or reasonable for me is to just move the exit. If I was still in the trade, obviously I wasn't, but this is what I would have done is move the exit, because when it pops up, if it's going to break this area by a tick and have my exit sitting here, well, it's going to always get a fair bit of momentum. Like, this is a fairly key pivotal point in the market. Once it breaks through there, it's going to get a bit of a rush through that area, no problems. So it's pretty crazy for me to, even though I have a 10 tick exit, have it sitting at 1400. You know, got a lot of potential for it just to pop through a little bit more. If we're going to have an exit here, I might as well have it at 10 or 12 or 14 ticks. So what I would have done is open it up, let it go, and see what it done. And when it starts going, then put it to 1400, and then see if it can ride on up to 1402, which was my original exit targets. It's just about looking at different areas in the market and understanding sort of certain support and resistance areas and pivotal areas and what the market's likely to do, and giving yourself the highest probability of things happening. So that for that reason, even though there's a fairly key level there, although the market didn't really react to it early on, I was still prepared to let my profit targets run up higher if I was able to stay in the trade. Then from there, obviously, as I was got broke even down here, what I do look for is the market to push through. So this area here, as we were coming out to this key level, if we were able to push through it, this is my version of the 5-minute buy, or what I call my 5-minute continuation. It's a key level, and I need to see a bit of momentum through it, so 3 to 4 ticks depending on the momentum level. So this one only needed to go 3 ticks past it really, because there was certain momentum here on the upside. Then placed my order on 1400. Actually placed my order on 1425 just to give it 1 tick, just give it a little bit more room. Just thought it had a lot of potential to go. Once we saw this green candle and no sort of backlash from it, the certain momentum, all the other marks continuing up, so I had the order sitting here at 1425, just missed it by a tick, and then away it's gone. So overall for the day, and then that was as far as setups, that was it for me. So overall for the day, just the break-even trade. So that's a wrap up for Tuesday, back on Wednesday.